What's going on, guys? Welcome back to another case study. We'll be covering euro dollar today. Got the replay tool on, so we'll kind of go through it and track it as it's like almost live with you guys. So it is set to 15 minutes before New York Open, which is perfect. And let's start off on the hourly, honestly. Yeah, perfect. Okay, so NFP last week, we get a big spike down, grabbing all of this liquidity to the left-hand side, trapping those buyers. And that's what fueled us for that big move to the upside, grabbing all that liquidity from the left. And then that's where market closed last week. We'll go to 15. Monday, you kind of wanted to stay out of the market because after such a big move like this, you got to ask yourself, where is the liquidity? And we didn't have any yet, right? So that's why Sunday and Monday was kind of just slow, choppy a bit. And then we kind of had a slow bullish move to the upside. And yeah, so that's why Monday was kind of ugly. Nothing really interesting here. And now Tuesday comes along. You can see, if you want to track what happened on Monday, we actually ended up running this inducement high to the right, mitigating, which would have been a liquidity block up here. We can check it out. Up here, perfect. I believe, honestly, it was on the 1 minute, so we'll just mark that out. Blue. There you go. So we ended up tapping into that area and moving away ever since. So now what can we expect? Well, let's mark out everything we see. So right away, what do I see? Yesterday, we left a bunch of liquidity at the lows right here. And if you can see, what do we have right below? Well, we got a liquidity block right here. We'll go on to 15. You can see it was, yeah, definitely a little bit cleaner. Perfect. And we took liquidity from the left, which allows us to possibly see reactions out of this. Are we just going to tap this liquidity block and move on forever? No, liquidity blocks, as we know, provide reactions in the market because, again, the whole purpose of these things is there's no liquidity underneath this low, so there's no reason for us to run it yet. So sometimes we'll build liquidity at liquidity blocks and then we'll continue down, right? And grab all that liquidity that we engineered. Perfect. Okay, so this is what I see right now. Again, this is right before New York Open. Tapped into this. Cool. Okay, what else do I see? Before we took this inducement low to the left, price took out internal liquidity, providing us, providing retail a trap, because after taking that high out, they are going to be looking to buy in these areas here, right? And they get trapped, okay? So we take out those highs, induce buyers, and then we trap them. And now we're trading at these areas over here. And again, same thing occurs. We take out these highs, and then this is going to be a trap as well. We'll mark it out. Perfect. And buyers get trapped again, right into the liquidity block area. Perfect. Now, what do we expect this to be? Sorry, I'm gonna get this marked out. We expect this to be a trap, okay? Because since we've taken the liquidity to the left-hand side, this now becomes inducement high. So we want to see price above this high. Now ask yourself, what can happen after this high is taken? Well, if we get here, false reactions because it's a liquidity block, pull back, and let's say we take the high. Well, now, since we've taken this high, retail sees that as break of structure, so they're going to be wanting to buy this thing, right? Maybe a reaction here, and then tank to the lows, okay? Because they see this as a BOS, okay? But as we know, the market doesn't work like that, and then we can eventually see the market run into these areas over here, okay? So let's keep tracking price action here. There was actually some buy opportunities if you wanted to be involved in the market short term. Okay, so now we're trading these areas up here. Why is this important? Well, since this is a liquidity block, right, we've taken out these highs here, we can expect false reactions. So let's track price. We come down and we now taken out, we're starting to trap buyers. Okay, perfect. Let's keep tracking over here. We go deeper and we tap into, sorry, I forgot to mark this out. But now we're tapping into these liquidity block areas. So this area, whole area is a liquidity block. And you can see the market ended up running that last point of liquidity, that inducement low, which now tells me we've tapped into this liquidity block area. So one entry would be like this. You'd have to tuck your stop all the way below this low. Okay, and RR wise, doesn't make too much sense. So you'd have to wait for price to either come deeper to the extreme, or we're going to wait for a confirmation entry. And there it is. It's going to be on a very small scale, but look how we came up, printed this high, printed the low, again another high, and then we come down and trap there, run that internal point, mitigate liquidity block. So essentially that's our retest there. Your entry could have came literally right like that. Stop below and targeting the highs. Again, this high up here, false reaction from here, and now this is all engineered liquidity. Actually, we can mark it like this. I'll mark this high here, red, and that'll signify to us that that is engineered liquidity. So that high purposely reacted off this area to the left and moved away just to build liquidity above here. Okay, so perfect. Now, if you didn't get in from this, we had a liquidity block entry right here. Let's see if that would have made sense RR wise. Yeah, you could have taken it like this, 3.5. So it would have been just over 1 to 3, which is still pretty good. So two different ways of getting involved in this buy position, again, from where I took it, or if you wanted to take it on the retest. Okay, perfect. Again, why did we react to this high? Well, since we've taken out this low, retail sees it as what? Break your structure. So they're going to be wanting to sell again at the highs. And that's why we keep getting these false reactions. And finally, look at all the liquidity we're now building to the downside. Why is this important? Well, after we take out that liquidity that we marked up here, look at the reasoning we have to go lower now, right? Look at all that buyer liquidity we're going to leave. And there's your buy target hit. So how can we get involved in the entry I took? So this I actually did take. I didn't post it with you guys. It was a counter trend trade, so it wasn't full risk for me. But now the sell that came up was full risk. Look what we had to the left. So if I mark this out, we took out those highs there, black, and then we left a liquidity block area right at the extreme. Okay, on the 1 minute it doesn't show it as an imbalance. On the 30-second it would, but you can see how this high up here was inducement high after we took out this low, and we never returned ever since. Okay, 109.505. So you could have taken extreme entries up there. Look how you would have just got wicked in there like that, and we move away. If you didn't, no problem. Simply wait for price action to build us an entry. Okay. Look how we've now taken out lows here. So we're going to want to see price above here at the least for sellers to get trapped. We're building liquidity at it. respecting the lows. Now, we have now taken that high out, perfect. We're going to want to see a liquidity block form, and there you go. Liquidity block forms there. Next candle should tap us in. Nope, not this one, next one. Perfect. 2.5, we'll go 3 pips. That is one entry there. Again, if you miss this extreme, a little bit difficult to grab this one in live price action. Still makes sense though after the fact, the benefit of hindsight, of course. And then there is our confirmation entry after sellers get trapped, okay? Because this whole area here was a trap, okay? So they get taken out, we get a reaction down. There's our liquidity block retest. Move away. Look how we're respecting the lows. We've now printed a possible inducement high. Market sells off, takes the lows, leaving an inducement high. Market comes up, spikes above it. Classic stuff. And continues down. Perfect. So where can we be targeting? Just like we talked about before, we got this low down here. Just like this. And boom, done. All right, so again, quick summary of it. We had buy entries into the trap, understanding that this area here was going to be used to build liquidity. After the high got taken, literally right here, right when the liquidity got taken from there, this was at 9:30. So you had the Confluence's stock opening as well. You had the opportunity of taking an entry off the extreme because we had a liquidity block here. And again, if you missed that, we wanted to wait for current price action to build us that entry, to build us that the story for an entry. All right, which ended up coming again. You could have taken it above this inducement high, or you had a liquidity block retest right away. Either one works. Both are valid. With our stop loss going above that high. All right, obviously leaving a little bit of breathing room for spread or whatever it is, or sorry, however much it is, whatever broker you're using. But yeah, and that's it. Again, targeting all of that liquidity to the downside that we left, right? All of that buyer liquidity, attacking it aggressively too, right? Look at all that. Look at the volatility in that move. But yeah, that wraps up this case study. I hope you guys enjoyed, and I will see you guys in the next one.